Welcome to the Brokers Podcast, the place where we give commercial real estate investors insight into the New Jersey industrial real estate market. I'm Scott Perkins.
And I'm Chris Todd. We're going to show you the world of industrial real estate in New Jersey, the movers and shakers of the industry, the trends, the prices, the next big thing, all the stuff you can't get anywhere else so you can confidently invest in the market.
So here we go. Welcome to Season 3, Episode 1 of The Brokers. I'm Scott Perkins.
And I'm Chris Todd.
Usually we are joined by Carrie Barrett, but she's not here this time. She'll be joining us next episode when she regains her voice.
All
right, let's get to the wine. This episode of The Brokers, we have a 2016 Al Pasión, which is from Argentina. The great thing about this wine, it was a gift from Jim Petrucci of JG Petrucci, one of the most successful developers in the area over the last several decades.
Thank you, Jim.
Thanks for sending it from the Cree Wine Company. So we really appreciate it.
Cheers.
Cheers. All right, Chris. Let's talk about the banking crisis.
Sure.
Usually when the Fed hits the brakes, someone goes right through the windshield. And who was it this time? It was Silicon Valley Bank, and it was Signature Bank. How that's going to affect commercial real estate, we're not exactly sure, but it's going to affect commercial real estate.
Yeah, and we had to bring it up. It's very topical. So started from the top. That's going on right now. We don't know how it's going to impact it, but it's certainly something we're all keeping an eye on.
So let's talk about what's been going on since the last time. There's been some changes. Some things seem the same, but some things are different.
Sure. So it's been about, I think, 3 or 4 months since we've spoke to you guys, and we kind of want to just recap what we've been seeing. Some things are different, some things are the same. Some things that are different, a little bit of a changing of the hand and the guard on the investment side. Some newer groups have been able to make some splashes in the market. We've seen Penwood be very active. We've seen Marcus Partners, the Northbridges, who were always chasing it, but they've certainly seemed to have some success.
They've certainly been in the market before, and we've worked with them in the past. It's just that they've been getting to the finish line a lot more recently.
Sure, in this new kind of interest rate climate, new world. Some of the bigger guys, I'm not going to mention them by names, but some of the guys who've maybe been eating everyone else's lunch over the past 2-3 years are dealing with it a little differently. We were in a meeting and we had a group say, we asked, what can I do for you? And he said, you can focus on servicing your other clients and for now, and we'll let you know when we're back buying. So there are definitely some people on the sidelines, and some people on the sidelines, some people more active than ever.
Well, some people are fundraising and trying to figure out where their funds are coming from, and they're not exactly sure how they can pencil out a deal, so they're pencils down.
Yeah, but with everyone pencils down, there's a new deal out in the market right now. It's a development deal. It's a main location in Elizabeth. It's out in a book with one of the big capital markets groups, and I heard they had 21 first round bids, and 15 made the second round. And there's some quirks to the deal, but 21 bids on the first round, that's a lot, and a lot of them are new entrants, have never bought anything in New Jersey. So again, for every group on the sideline, we're seeing one or two. There's plenty of groups out there that have some money that they're trying to spend.
And still on the development side, which is starting to become more and more difficult. So it's amazing that it's on a development deal that they see so many entrants.
Sure. And I know right now, developments are probably the hardest thing to pencil. With the DEP regs, I know we spoke about some of this in season 2, season 1. Hard to underwrite an exit cap. We don't know where interest rates are. And because of that, we're seeing a lot of groups start looking at all of their options when it comes to development. We have a very large, again, I'm not going to name names because sometimes I can, sometimes I can't. This is one where I don't think I can. It's a very large publicly traded industrial REIT that very recently bought another very large publicly traded industrial REIT. If you could see who I'm talking about, but I'm not mentioning names, they have a site where they're considering looking at multifamily because it's by a commuter rail where it's industrial, it's owned industrial. It's a B building in a very good market, and they're considering multifamily, which I think is something we definitely didn't see a year ago, 2 years ago. And now, given where everything is, I think people are considering all of their options.
Well, is industrial still the darling is the question. So when you start looking at different possibilities, well, maybe it is sometimes and maybe it isn't. Maybe things are changing up a bit.
Yeah, I still think it's very much the darling, but it is interesting to see people at least do the exercise. And I know there are some developers now who maybe had a really good basis and a year or two ago would 1,000% have built a building, and now they're looking, can they flip out and take some of the risk off the table?
Well, I think they're also doing it on existing buildings as well.
Yeah.
They're going to take some chips off the table, take some risk off the table. They would sell in this climate, but they're not bringing it to a book. They would sell if they got the right number.
Sure.
So there are some people taking some money off the table.
Yeah. So, you could talk to 10 different groups right now and get 10 different answers. And I think that's part of why everyone's confused. But I think as a broker trying to navigate it, it's kind of part of what makes this kind of exciting. So do you think there is some opportunity?
There's opportunity because there's movement. You don't know where the movement's going, but when there's movement, there's opportunity.
Yes. And I do think there's been a lot of talk about the leasing. Can the leasing bail us out? There might be some softening in the leasing, but you're still also seeing Class A space, brand new space, get taken. Mm-hmm. We had 2 deals this month, so we'll let you know when we were recording this, in Linden, new construction being taken off the market, where they got leased up at good numbers. And there is going to be, I think, a very big lull in development. Right now, it's very hard to get anything approved, hard to make the math work, make the math pencil. So in 2 to 3 years from now, when all the current development gets built and gets leased, there's going to be a lull in supply where there's going to be about a year or two where almost nothing's built.
You're not going to see a lot of starts. You're not going to see starts because of construction financing, because of the interest rates going up, because you don't know if you can really lease it and get out at an exit cap that works.
Sure.
So I think you're going to see people slow down. And then you're right, 2 years from now, we're going to look up and say everything's leased. Yeah. Well, now what?
Yeah.
It's time to get back in the ground, but then you're going to be another 18 months.
Sure. Just the timeline of development.
The timeline of development.
Yeah. And so if the leasing can keep up with these buildings as they deliver now, I think we're going to be in a very interesting place for rent growth, for a lot of math to pencil. It's going to be great for everyone except the tenants who are going to be stuck with some much higher rents, even in the Class B space. And I think some of the Class B space right now, maybe you're seeing a little bit of softening depending on the size range. But at the same time, we are going from a 99% vacancy to maybe 96, 95.
Which is more normal.
Yeah, maybe a healthier. And what we're seeing, I guess, just the two of us, we're certainly seeing a ton of renewals still happening. Mm-hmm. I think renewals are keeping vacancy in check. We have a lot of tenants that, they get a renewal proposal at a number they don't like, they don't want to.
And they get a little upset about it. They're going to go out in the market. Go out in the market.
Sure.
And the market is probably worse than the renewal.
Yeah.
But I think that some of the activity that you're seeing in these buildings is because of that.
Yeah.
And they end up staying where they are.
Yeah. Because we've had that where, we're talking to a landlord, a group toured our space. They said, well, where'd they end up? They renewed. They just said it's not worth, the cost of moving, the disruption in business. So we've seen a very, very healthy renewal, activity and at pretty good rents. And I think that's keeping vacancy in check. And if we can keep vacancy in check through this development cycle, I think you're really going to see a ton of rent growth again.
All right, I don't think rents are going to ratchet back by any stretch of the imagination.
So.
Maybe they're not going to increase as much as they did a year ago or a year and a half ago, but I still think they're going to go up because of the dynamics that you're talking about.
Yeah, and there still is some rent growth. It just depends on what the product looks like. We've seen some of these blend rates where it's half building, half parking, and maybe half is being generous.
Very
it's
generous.
Building and some parking. And, as the markets become more institutionalized, they know to charge for it. I think it's always been there. And people maybe didn't charge for the parking.
No, you definitely didn't. It was just part of the building.
Yeah,
but now it's getting put back into the rent.
Yeah. And we're seeing, rents are still pushing on some of that kind of space where maybe some of your commodity spaces, the rent's staying stagnant and maybe it's a little softening. But here, it's leasing up 1, 2, 3. We're pushing rents. There was a deal from a broker owner at Exit 12. That was at $26 a foot and 20 for the building, 6 for the parking. There's a deal that's about to be signed in Clifton, where it's 19. I think 3 was added for the parking. And these are big numbers for these markets. And I think if you have a building that has something, whether it's ceiling height that makes it special or a dock ratio that makes it special, some parking that makes it special, those buildings are still doing very, very well and still leasing, very quickly and at market high rents.
Well, I think that's going to continue as well because there's just not a lot of that type of space, even though the institutions are pushing for renting parking and putting it back. It always existed before, but it's still not a lot in places like the Meadowlands. You don't really see that. So if it exists somewhere, you got to charge for it.
And now that we're getting to parking rents, a staple in the brokers
Carrie
show.
usually loves this part.
Yeah, they always ask, "Where's parking rents?" Since it's been 3 months.
Are we still calling it parking rents?
No, it's iOS/ISF. It depends who you talk to on who you will offend.
But on the brokers, it's the parking rents?
On brokers, has been parking rents. Is how politically correct we are. We're going to do a whole next episode, just on the development of iOS parking rents. So stay tuned for that. Maybe that's a guest, maybe not. Maybe Carrie's back, maybe Carrie isn't. You just have to stay tuned and see what we throw at you. But for now, that's kind of, I think, where we've seen the market. I think we're cautiously optimistic, and I think moving towards just optimistic.
We've always been optimistic on the brokers. You especially been optimistic on the brokers. I don't see that changing, but I think
because I don't understand banking.
Well, that's probably
so for me, it's going great.
Well, we'll continue with what's going on in the New Jersey industrial real estate market. Maybe not banking, that's not Chris's thing. But next time on the brokers, we'll be doing parking, and we'll be doing iOS.
Yeah. So until then,
all right.
Cheers.
All right.
Have a drink with us, and we'll see you then.
All right.
That's all we've got for this episode of The Brokers. If you liked what you heard, don't forget to like, comment, and subscribe on iTunes, Spotify, or wherever you listen to your podcasts.
Also, make sure to link up with us on YouTube at Perkins Todd The Brokers and on Twitter at The Brokers NJ. Until next time, we'll see you then.